Hello, friends. Welcome to our podcast. Today with us, we have Mr. Kunal Shah, Senior Technical and Derivatives Analyst from LKP Securities Ltd. Hi, Kunal. After a good month of April, do we see this trend continuing for the rest of 2023?
Hi Karthik, thank you for the warm introduction. Firstly, to start with, the last year 2022 was a very painful year for the entire global markets. Multiple reasons were responsible for it. First is the Russia-Ukraine war. Second is the interest rate hike in the US. These are the reasons which led to global volatility, and even the Indian markets felt the selling pressure. Even in 2023, in the start, we again started on a very bad note. In the first 3 months, we saw 50,000 crore of selling by the FI in the Indian equity markets. Finally, we got a breather in the April month when the Indian capital market went into that oversold territory. Talking about that Nifty index, we witnessed a sharp recovery from 16,800 to 18,200, 300 levels on the upside. So you can clearly see a 1400, 1500 points kind of a rally. We expect this trend to continue in the current series as well. If there is any profit booking which comes into the picture, could be an ideal opportunity to again create long positions. For the Nifty index on the downside, 17,500, 600 is now a very strong support. Till the time we don't breach this support on a closing basis, we expect the rally to continue on the upside, and the Nifty index may hit the all-time high levels as well.
America and Europe both raised its interest rates. Should the Indian investors be worried about it?
So recently, both the economies, the European and the American economy, came out with its monetary policy, and both of the economics hiked their interest rate by 25 basis points. Now, this was pretty much expected by the street. The street was looking forward for the commentary that what is the outlook going forward, and that is where the Fed chairman indicated that going forward, the rate hike will be dependent a lot on data. He didn't indicate for any rate hike decline, but he said that we could be near a terminal rate. That means the pace of the rate hike could come down or it might stay at the same level. And this is what the street took positively, and that is where we saw the recovery in the Dow Jones and the Nasdaq index. So again, we might say that the worst for the US might be near to an end, or we are very close to that. And if that is the case, we expect the global bull run again to start, and Indian equity markets again to outperform the global markets, which has been happening at least since the last 1 to 2 years.
What is the position of FII right now?
The FI data were extremely negative if I talk about starting of the year 2023. In the initial 3 months, the FI sold almost 50,000 crores in the cash market. The derivative data was also extremely negative, where the long-short ratio was 9% to 91%. That means they were 9% long in the index and they were 91% short. Now this got reversed to quite some extent in the rally what we got in the April month. So the index and the Indian equity markets were clearly in an oversold territory. The FI started to cut down on their short positions. There was a massive short covering what we saw in the series of April, and now again the long short ratio has come back to 50% here. So that is a good sign for the Indian market as well, that FI have cut down their short positions and have added their long positions. So even the cash market data has been quite positive. In the last at least 15 to 20 days, we have seen good amount of buying by the FI in the cash market. Every day there has been a figure where the FIs have bought more than 1,000 crores of in the cash market as well. So again, the data in the cash market turns positive, as well as a lot of short covering is seen in the FNO data as well. And along with that short covering, we have also seen long built up positions. So the FI data looks very bullish from the current perspective, and that is why we are very bullish on the market, that the worst is over. Whatever declines you get into the market, utilize that decline to buy the Indian equities.
So as per you, which sectors are likely to outperform going forward?
So as I mentioned that I am extremely bullish on the Indian equity markets. Now with every new bull run, we have different sectors contributing to it. Now I would like to discuss about a couple of sectors which could outperform the market as well. The first sector which I am extremely bullish on is the Nifty PSU bank space. Now PSU banks have been under a lot of selling pressure in the last at least 1 year or so. Now post that selling pressure, we saw a sharp recovery in the month of April. Now if I talk on the technical chart perspective, Nifty PSU banks has given a strong breakout on the technical chart with sharp increase in volumes. We expect this outperformance going forward, And the top three large caps from the PSU banks, which is SBI, Bank of Baroda, and Canara Bank, remains our top pick. We are extremely bullish, particularly on Bank of Baroda, followed by SBI, and followed by Canara Bank. Also, the smaller PSU banks such as Bank of India, Union Bank, Karnataka Bank could also outperform the market as well. The second sector which I am extremely bullish on is the Nifty Reality Index. The same case has happened with the Reality Index with the rise in interest rates. Since interest rates were going higher, the Reality Index witnessed the selling pressure. Now, in the recent RBI policy which was conducted, the street was expecting a 25 basis rate hike. But the RBI governor came out with a status quo. Now, this was surprising for the market, which no one was expecting, and that was positively taken in the entire real estate space as well. We expect the entire space to outperform, and the top pick in that would be DLF. DLF, again, if I talk on the technical chart, it has given a very strong breakout with volumes. Whatever declines you get in DLF, utilize that opportunity to buy. We expect a 15 to 20% kind of a return in a year in this stock DLF. The other stocks like Godrej Properties, Prestige, Shobha would also continue to perform, but DLF is something which we are extremely bullish on the reality space. So Nifty PSU banks and reality index is what one should keep on your radar for outperformance.
Looking at the current scenarios and developments, do you see the road clear for Nifty to hit 20,000?
Whenever there is a bull run, it is always followed by a sharp correction. Even if you look back the data, whatever bull run the Indian equities have got, they have been always followed by a sharp correction, whether it was the globalization rally or whether it was the IT boom. Now, the larger term bull run for the Indian equity started from the year 2020, that is post-COVID. Now, post this large rally what we got, we saw a sharp correction in the year 2022. Now, this is generally the nature of the bull market, that it goes through its own phase of correction. Now, in the month of April, we saw a sharp recovery from that oversold territory. So we can say the entire correction of that bull run is over. We expect Nifty to surpass its correction high of 18,800 and go towards the levels of 19,000 on the upside in the very short term. Now, the golden question which a lot of people ask is, when is Nifty going to hit 20,000? We expect this level to get achieved either by the year end or at the start of the next year. So the entire data as well as the outlook for the Indian equities remains extremely bullish. The strong momentum is likely to resume. Whatever dip you get into the Indian equities, utilize them to buy. We expect Nifty to go on the higher end first towards 19,000 and then towards that golden figure of 20,000.
Thank you, Kunal, for this insightful conversation.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing. The securities quoted are exemplary and are not recommended.